welcome to the Wharton Fintech podcast. I'm your host Tarang Gupta, and our guest today is Dee Choubey, Co-Founder and CEO of MoneyLion. Prior to starting MoneyLion, Dee was an investment banker and worked at Barclays, Goldman Sachs, and the Citigroup. He also served as a vice president at Citadel Securities. Dee holds a BA in economics with honors from the University of Chicago. Join us as we discuss MoneyLion's mission of rewiring the American financial system, how to grow in B2B versus B2C financial services, building a culture of innovation in an organization, and much more. I would also like to give a shout out to the third annual Wharton Fintech Conference, scheduled for March 30th and 31st. Tickets are now live, and you don't want to miss the opportunity to hear from and network with fintech leaders. This year's lineup includes guests from Greycroft, QED Investors, Ribbit, Visa, PayPal, Chime, Ripple, and many more. Go to whartonfintechconference.com or check out our LinkedIn page to get tickets. Now on to today's episode. Eddie, good afternoon. Thank you for joining us.
Hi, Tarang. Good to be here. Thanks for having me.
So where are you calling in from?
I'm calling in from MoneyLion's offices in New York City.
All right, let's dive into the questions. For our listeners who may not be aware of your background, can you talk about what you did professionally and how you got involved in fintech?
Sure. So, look, I took a pretty, traditional route after college. I went to the University of Chicago, worked in Wall Street for 10 years. I had stints in the financial institutions group at Goldman Sachs. Worked at Citadel, and really had a front row seat to the evolution of consumer finance throughout the 2000s, through the LBO boom, through the credit crisis. And a lot of the learnings from the credit crisis, were the foundations for starting MoneyLion in 2013. And then, since then have really been, building towards that mission of rewiring the financial system, almost 10 years into it now. And it's been an incredible journey.
So what are the differences between leading a growing private company versus a public company? I ask this because you took MoneyLion public, right? So that must have been a transition.
Yeah, look, I think in the private markets, you have a lot of degrees of freedom, right? You have to convince your venture capital investors about, sort of your roadmap, your innovations, how you're changing your industry or your sector. But look, it's limited to a small universe of investors that you have to convince that you're on the right path. In the public markets, you're building publicly. Everything that you do is public. Your roadmaps are public. Your successes and weaknesses are really tied to that quarterly and annual reporting cycle. But at the same time, being a public company requires you to have a lot of discipline. It really separates the good companies and the bad. In the short term, they all say that, it's a voting machine. In the long term, it's a weighing machine, right? So, we're just getting our sea legs under us as a public company, but it does drive significant requirements to be disciplined and actually have business models that work and that generate returns for stakeholders.
Can you talk to us about MoneyLion and what the company does?
Yeah, sure. So look, I think it's been an evolution, right? So we've evolved significantly since we started the business in 2013 when we were using, a very simple algorithm in analytics to provide cheaper, faster, more convenient credit products to consumers that otherwise were not getting it from the money center bank. So historically we've been known as really executing a neobank, challenger bank, digital bank strategy. It was always a platform. We provided banking, investing, advice, lending, credit, and marketplace products through the neobank. But increasingly, what we're super excited about is the enterprise side of the business. We've made two incredible acquisitions, one of a media company and one of a company called Even Financial, which is an embedded marketplace. So they power the internet in the sense that any publisher, think of CNBC.com, Fortune, Forbes, Business Insider, all the way down, to be able to provide financial products on their channels as publishers, so they can monetize the massive amounts of impressions that they're having by matching consumers to mortgages, insurance products, personal loans, credit cards, auto loans, so on and so forth. So that enterprise side of the business where we're providing MoneyLion on a B2B2C basis is incredibly compelling, and it has a lot of synergies with the historical neobank strategy in terms of the data compounds. We're able to use the existence of preference and intent on the network to improve recommendations on the consumer app, and we're able to give on a first party basis. Of course, the products that we build, but we understand that the American consumer has multiple financial inflection points, right? Nothing is ever static. So now we don't have to build every single financial product. We can bring in the products of the network. And what it does really from a strategic perspective is we don't compete with anyone anymore, right? So a lot of times I get the question, who are your competitors? Is it SoFi? Is it Chime? Is it Dave? Is it Robinhood? Is it is it someone else? Is it Credit Karma? And my answer now is categorically, we want to be working with all of them because we're participants in, we're running an exchange, we're running a network, and everyone should be using that exchange, if you will, to monetize better and to ultimately provide a more robust set of financial products to the end consumer.
Diving a bit more deeper into MoneyLion's business, right? Who are your main users or biggest users, key competitors, and what segments of the business drive most of your revenue?
Sure. So look, I think just like I said, the consumer business is about 65% of the revenue. That's increasing significantly. The mix of the enterprise business is increasing significantly. From a user perspective, the consumer business continues to drive significant growth on direct to consumer acquisition. On the enterprise side, it's a two-sided marketplace. We have 500 or more channel partners. So these are publishers, these are websites. Anyone who's got eyeballs that they want to monetize is a customer of MoneyLion. And on the other side, we have 400 plus product partners. So these are the largest fintechs in America. These are the largest banks in America, insurance companies that are looking for leads to really get their products into. So it is incredibly diverse in that sense. From a revenue perspective, it's fairly diversified, right? So on the consumer side, there's the whole neobank monetization strategy. There's interchange, there's transaction fees, there's administrative fees that are embedded in there. The model has always been to give free or low cost consumer finance products directly to consumers, and then really rely on that engagement to monetize them through the marketplace strategy. On the enterprise side of the business, it's partly SaaS and it's partly a spread-based commission that we earn. And from a diversity perspective, we've significantly diversified the way we make money over the last 12 to 18 months, if you will.
As being one of the rare organizations that does both B2B and B2C well, do you feel that the key to success in each of these segments is different?
Yeah, look, 100%, right? So we acquired Even Financial in February of this year. For the most part, we've allowed that business to run as a subsidiary. The go-to-markets are very different. The customers, of course, are very different. But what's similar between that part of our business and the direct-to-consumer side of the business is that we have a similar data DNA, a similar technology DNA, a similar analytics and AI DNA. So what we do for one part of the business, we're able to use in the other part of the business synergistically to make the product better. We're able to all the data that's derived on the consumer side of the business, we can now commercialize that and give that as a service to our enterprise clients. All the intent and preferences that we see from the consumer side, now we can share that with folks on the network. So it makes the product better on the enterprise side. And for the consumer, just by having every single financial product that's available in the United States available through the MoneyLion app, it really makes it the only money app that every American really needs, right? So it increases our ability to go and address larger segments of the population. It doesn't just have to be a certain FICO band or a certain income band or a certain employment type. It can be intentionally mass market because of the synergies of both sides of the business.
On its website, MoneyLion claims that it's the world's most innovative finance and technology company. What drives this culture of innovation? And as the company has scaled, has this culture evolved?
Yeah, look, it's a great question, right? So oftentimes, when companies go public, the slope of innovation changes. So what we are trying to do is, while we are taking significant costs out of the business, we continue to maintain a culture of experimentation, of iteration. We have over 300 employees, sit in Kuala Lumpur, Malaysia. So that hub of innovation, of engineering, of product excellence, of data and analytics excellence really allows us to continue experimentation. So we're already working on things that we'll bring to market in a year and 2 years. Form factor changes in how people think of searching for financial products. And then we have an amazing set of engineers here in the United States that work on our enterprise side of the business, right? So the culture there continues to be that of delivering success to our customers. And then innovation, right? It starts from the top, and it starts from, we exist to disrupt, and we exist to deliver that form factor change. So if we were just executing a neobank strategy, that's not really that interesting anymore. I think what's really interesting is using the data advantage and the compounding effects of the massive amounts of preference data that's being generated throughout our ecosystem and throughout our network to actually make financial product search better. For instance, an example could be like, if you go to Google and search for a home, you get very static responses. If you come into a platform like MoneyLion and you search for a home, we can contextualize that for exactly how much income you make. We can contextualize it for the zip code or state or city that you live in. And then we can really recommend ways to finance that house purchase through a mortgage that you have a high likelihood of getting approved for, right? So that three-dimensionality to really how we're thinking about, the form factor change is ultimately what gives us a lot of confidence and excitement that we're working on something special. We're working on innovative technology that's bringing together a media business, a consumer finance business, and a network and marketplace business.
I know this is kind of off script, but do you feel that over the decade that you have been in the fintech space or the startup ecosystem, have things changed when it comes to hiring, innovating, and do you feel that certain things have become easier for you to start MoneyLion today as compared to a decade ago?
Yeah, look, I think that all of those things go in cycles, right? So when we started the business in New York, San Francisco was decidedly the sort of the hub for tech talent in the United States. But, really hiring people from the ground up to build what we've built probably added a couple of years of just execution. I think it's much easier now to start with a set of APIs. I remember when we were doing our own aggregation for bank transaction data, right, even before the likes of Plaid and others were built. So now, of course, those APIs are much more mature. There's a set of, very well-trained technologists that have worked on fintech over multiple different, kind of iterations. There are growth teams, there are marketing organizations that have been trained on digital acquisition. When we first started, no one really knew how to advertise on Facebook, right? So now that's evolved. Now, really, no one really knows what the power of TikTok is. But again, those things come in cycles. Hiring has often oscillated, right? So it was cheap, then it became really expensive, then it became cheap again, and now it became expensive. And now, of course, with the drawdown in the markets, the opportunity really to consolidate excellent talent becomes an opportunity again. It's a great time to build, and it's a great time to start businesses, just because the massive amount of incredible talent that are going to be looking to take advantage of the next cycle of growth and innovation.
I'm glad you mentioned about hiring, because the next question is MoneyLion hiring? If yes, what do you look for in potential colleagues?
Yeah, look, we're always hiring. I think the name of the game for fintech, tech, and just broadly in this market, given that there's a lot of uncertainty in Q1 and Q2 on the state of the consumers, they have to be very careful about overhiring, right? So there's a lot of stories out there where companies have become a bit too big, some bloat in the system. So that's always healthy to kind of right size the business equation, the business model. But that said, the best talent will always find homes, and we're always looking to hire the best talent to come and work for MoneyLion. And what we look for, again, similar to what you'll hear others say, is grit and perseverance, right? That folks that are problem solvers. folks that can really think outside of their swim lane, right? So if you come into a startup and you only want to work a certain way on a certain project, and you want to be oblivious of everything else that's going around you by way of the corporate strategy or sort of product innovation, then these types of businesses are probably not for you, right? You probably ought to look for more traditional avenues, or employers, Amazon and the like, and the FANG and the like, maybe better places. But if you have grit and perseverance, then places like MoneyLion are incredible places to start a career and kind of learn incredible skill sets. Our incredible employees always say that working at MoneyLion is like getting a PhD in Fintech, because you get to work on digital banking, you get to work on managed investing, so you get exposed to the custody issues around sort of the traditional finance world. You get to work on crypto and DeFi. You get to work on lending. You have to understand ability to pay, willingness to pay, skill to pay. You have to work on operations. You get to work on a search engine. You get to work on content creation. You get to work on algorithms that predict what consumers may want to buy next, right? So all of that together create incredible crucibles for building a very well-rounded strategic skill set. So again, but at the same time, it's not for everybody, and I think there are going to be real opportunities for folks to find a lot of roles out there that give that type of vantage point.
Building on top of that, MoneyLion was named in Forbes Fintech 50 in 2020. It went public last year. What's next for the rocket ship? And also, how are you navigating the current uncertainty in the market?
Yeah, look, I think that this year has certainly been a pit stop on that journey, and it's been really humbling in a lot of ways too, right? So, but we couldn't be more proud of what we have built, right? So if you look at when I started the business in 2013 to what it is now, when we took the company public, we were doing just under $80 million a year of revenue. We've publicly stated that we'll do upwards of $320 million of revenue in 2022, right? So, the revenue profile is incredibly robust. It's incredibly durable and diversified. As we think about the uncertainty of Q1 and Q2, right now our focus really is to rationalize the business model so we can show our investors, the market, the stakeholders, that the assets that we have in this business categorically allow us to build a business that can have over $1 billion of revenue. So how do we take $320 million of revenue to over $1 billion of revenue? How many new users do we need to add? How many new enterprise clients do we need to add or grow with to get to that revenue base? And we have clear path to getting there, and we have a clear path to profitability in the sense that when we took MoneyLion public, it was meant to be a venture-style growth company in the public markets. Given the precipitous change in the interest rate regimes and the cost of capital, what you're forced to do is you're forced to really kind of get to profitability faster. So over the next quarter or two, getting the business to profitability is one of our key rallying cries across the firm. We have all of the levers to be able to do it. We feel really excited about doing it because it's something to rally around as a team, as a global team. And it also is healthy because we're forced to be highly focused on delivering value to our clients, because when we're delivering value to our clients, they're going the best recognition of that is that they pay you a fair margin on that value that you're creating, right? And just really rationalizing that on a day-to-day basis is what we are laser focused on. And that's how we're going to be navigating the uncertainty, just by making sure that the $190 or so million of cash that we have on our balance sheet is 100% sufficient to get us to not only profitability, but on the other side of this uncertainty with a very, very robust balance sheet that's ready to accelerate growth, potentially acquire things on the other side of this.
Switching over to talking about the market overall, I would love to get your take on a couple of trends that you think will drive fintech industry's growth for the next 2 to 3 years. And where do you see Web3/crypto fitting into that equation?
Yeah, look, I think that anything that doesn't have incredibly verifiable or incredibly transparent trust is going to be a difficult place to be, right? So all of the new age crypto, the centralized coins that aren't passing the Howey test, where there's a foundation or an endowment that's making all the decisions about the coin, are going to struggle, especially with what's happened over the last couple of weeks. With the various exchanges and with the fraud that occurred on the FTX side, that seemingly everybody missed. So that's going to certainly put a damper into things. It's going to have multiplier effects in the way we diligence investments, the way we think about that technology. But that's not to say that there are parts of the blockchain industry, the parts of DeFi that are incredibly sound investments, that are incredibly well positioned to be form factor changes in the way data is shared, data privacy, of course, payments, of course, cross-border commerce. So we continue to see that those as thriving areas. As it relates to MoneyLion, what we're super excited about is the compounding advantages of having a lot of data, right? So we have seen over 100 million U.S. consumers. We know their preferences. We have a lot of their transactions. To be able to triangulate, of course, with the consumer's permission, if we're able to really play back to them insights that are really scattered across multiple accounts for them or scattered across multiple platforms, we have the ability really to become that trusted advisor, that aggregator, that advisor, that content provider at the top. And then we monetize through either a neobank strategy or an impression strategy or a network strategy. So really, taking that data, we've been talking about self-driving finance for many years. MoneyLion, we've tried it. We've tried many machinations of it, but we finally think that we have the scale and the breadth of data to be able to fulfill on that mission. So that's what we're going to be. That's a trend that we're really going to be pushing on, the personalized commerce, the personalized advice, all based on transaction data.
And talking about the flip side of this question, any segments in fintech that you think are overhyped or bearish on in general?
Yeah, look, I think that, like I was saying, there's certain parts of DeFi. If you're not able to verify immutability, those sectors are going to have a very long nuclear winter here, if you will. I think that that's definitely a case. I would also say, just kind of bringing it back to more sort of the traditional finance side of the world. I think that just winning on user interface or user experience is not enough anymore. I think 5 years ago, a MoneyLion or some of our fintech peers could just win the customer trust based on having a cooler app or having a much more easy experience, funding account, making peer-to-peer payments, investing. Now, I think if you're just doing a startup that's just trying to win on just the product side, that's going to be really tough. I think the new age companies have to really kind of double down on the form factor change. Are you able to meet customers where they are? Most Americans now are getting their financial advice on TikTok, right? Are you able to have a compelling value proposition and meeting the customers where they are, as opposed to even bringing them to your website or to your app, right? So the brand, the community, are becoming incredibly important for direct-to-consumer direct-to-consumer fintechs to scale. And we're seeing lots of people do really interesting and amazing things to build those communities. And if you're not able to do that, I think I'd be bearish on just starting a new trading app or a new crypto app or a new digital banking app. I think the vertical banks are going to be facing significant challenges as well, because at the end of the day, when you're running a neobank or a challenger bank, I think you have to actually run a bank. There's fraud costs, there are AML or KYC costs. There's a significant operational overhead that you have to employ to be able to make money on these digital banking businesses at scale. And then ultimately, the way you make margin is you have to either provide advice, which are versions of wealth management, or you have to lend money. which requires, again, a balance sheet, requires operational capabilities. And you think of MoneyLion, we have a near decade of experience now, providing credit both on and off balance sheet on our own behalf, as well as on behalf of third parties. Those become pretty high barriers to entry, but there's always, new entrants that'll find new ways of doing things. So, it's never a blanket statement, but that's how I think of the world.
Again, going a little off track here, but since you mentioned about challenger banks, I would love to get a perspective on incumbents or traditional banks launching digital services of their own, right? Or big tech players entering not into banking per se, but like buy now, pay later or the fintech segments. What impact do you think this will have for players who are still young or incoming players in the market?
Yeah, look, it's if you are just a challenger bank, or if you're just a buy now, pay later company, the existence of Chase, Capital One, Citi, Wells, Apple, and Google, you have to be able to coexist with those with your users having those accounts. So we made the strategic move a few years ago to be the interface layer. We actually don't mind if you have a Chase account or a Wells Fargo account. We don't always push our own direct deposit to the consumer. If you want to use a different bank account, God bless you, right? We'll actually sometimes even tell consumers that, hey, Bank X is offering, $150 or $500 to do direct deposit. Move it there for a week and then bring it back to us in a couple of weeks after you've earned your bonus or your bounty. The big banks do a good job, right? I mean, even if you go into your Citi app, it's a good app, right? It does what it needs to do. But where I think the big banks and the Apples of the world stop is just at the transaction. They don't go into the interface layer. They don't give you a full snapshot of how all of your accounts are, the covariance of all of your accounts working together towards a life goal. And that third dimensionality, the fourth dimensionality of what we're doing at MoneyLion and what fintech can do is the interesting way to really compete with and thrive against the existing incumbents.
Switching up gears and entering the last segment of the interview, what I'd like to do for this segment is introduce you more as a person, as an individual to our listeners. And I have some rapid fire questions ready for that.
Sure.
My first question is, what's a fun fact about you most people don't know?
Most people don't know this because I obfuscated. I hate eating salads. I was just telling that to someone right before this call. They're like, "Do you want a salad?" It's like, that's the last thing I hate. That's the last thing I like eating. I've tried for many years to be healthy, but I finally gave up and said, "Look, I'm going to just go with what I know, and what I don't know is that I hate eating salads." So for all the people that I've had lunch with over the years, that's something that you don't know about me.
How many fintech apps do you have on your phone right now, and which one's your favorite?
I use them all, and I have a lot of them. Coinbase is I like a lot. Of course, I love MoneyLion. I'm a super user on that. But a lot of respect for the amazing apps that are built out there. A lot of respect for what Square and Cash App have done.
If you had a time machine and you could go back in time, are there certain career decisions that you would change?
I think said another way, the advice I'd give to my younger self is just take more risk, right? I mean, this, we will look back at November 2022 as one of the best times to start businesses, to retool yourself, because there's a whole new wave of the cycle. That's the last cycle is ending and the new cycle is beginning, right? So. If you're always thinking that I need one more year of experience at an investment bank, or I need 2 more years of experience at a big tech company, oftentimes you already have the experience. It's not about the experience; it's all about the grit and the perseverance that make you successful. So, that's what I would tell myself in 2008 or 2009. That instead of staying in a role. That's rote in nature because it's doing things that have been done for 50 years in just different ways over and over again. Believe in yourself and believe in your capabilities and give it a shot.
Who is one entrepreneur or CEO that you really admire?
Look, I think that it probably would have been very popular to say this person 3 to 6 months ago, and it's probably less popular to say it now. But I think Elon Musk continues to be someone who deserves a lot of praise. One may not agree with him for every decision or everything that he says out loud, but to have the courage to make the hard calls is ultimately the conviction you need to run successful businesses, right? So, for instance, if you're doing a layoff, if the objective isn't to get to free cash flow generative or to a state where you're profitable as a company, what's the point of doing that, right? So, the clarity of decision making that he's had, it's oftentimes when you're an entrepreneur or CEO, you have decision paralysis because there's so many decisions to make. But having clarity of which decisions really move the slope of the business equation that make things work, that make things profitable, are the hard things to do. So, folks like him have certainly done it at scale and have done it multiple times. So I definitely admire the grit and the perseverance there.
And my last question for you is, what advice do you have for aspiring entrepreneurs? And is there something they can do to position themselves or set themselves up for success?
Yeah, look, I think that there's a lot of trite things that you can say, but from a practical perspective, just having a global worldview, right? I mean, it wasn't until the first quarter of this year that everybody started paying attention to interest rates, right? The iron law of interest rates were forgotten for 10 to 15 years. So having a worldview that spans your industry, but also where are we today as a society? Have these patterns that we're seeing today, have they happened in the past? And just kind of being a student of sort of the evolution of business models really gives a leg up to any entrepreneur starting in any industry, right? Because you can always say, why is my industry getting the capital that it's getting? What about interest rates or other investment opportunities that exist or don't exist in the market today is allowing my company to be worthy of getting capital and deploying capital, right? So it's a big privilege to take capital from investors because they're getting capital from somewhere as well. It could be a family office, it could be a pension fund, it could be a state, it could be private equity. So getting capital is actually a pretty big deal. And having a view in terms of why you're getting that capital, why you versus any other, kind of project or task, really allows you to make the right capital allocation decisions, the right decisions of focus on which parts of your business you really want to, that are worth doing, and some parts of the business that are worth letting go. And it gives you clarity as well in your decision making.
On that note, I'll let you go. But thank you so much for joining us, Dee.
Thanks for having me. This was fun.
Thank you for listening to today's episode of the Wharton Fintech podcast. If you like the show, then please show us some love on social media or consider leaving a review. It means a lot to us and helps spread the word to more listeners. If you want more content from our fintech community, please subscribe to our podcast and find us on LinkedIn, Instagram, Twitter, and Medium at Wharton Fintech. There you will find interviews, articles, videos, and much more analyzing all aspects of the industry. As always, special thanks to our editor, Rafael Osteria. Signing off until next time, I'm your host, Tarang Gupta.